Welcome back to the channel everyone. Today I want to talk about how to stay calm during the mother of all short squeezes. Many of us may have a plan, but some of us might not have a plan at all. But as the old boxing saying goes, everybody has a plan until they get punched in the face. And I think as we've been waiting for the mother of all short squeezes for so long, it is going to feel like a punch in the face. So stay tuned and let's make some money. And I want to dive straight in with the key information. So, as you can see, I've laid out a few things on the whiteboard on what we can do to prepare for the squeeze and how we can not panic and stay calm during the squeeze. Now, obviously, the first point on my list is to have a plan. Everybody should have a plan for the mother of all short squeeze and try and stick to that plan as much as possible. Everybody by now should have done the due diligence, they should have read the research, and they should have picked their own individual price bracket or multiple price brackets for the squeeze. I think the best possible plan of action is to select your price brackets, set your sell orders when you can as the price runs up, and stick to those prices and sell when the time comes. I think if you don't stick to your plan and try and hold AMC for that higher price, you run the risk of getting trapped and not selling AMC during the squeeze and end up selling after the squeeze when the prices return to a fair trading level. We know the squeeze is going to happen fairly quickly, and we know that after the squeeze, when there is zero buying pressure left, when all of the hedge funds have been liquidated, we know that the price is going to fall very fast and very dramatically back to a fair trading price, which may be between $50 to $100 per share. And therefore I think it's important not to try and play the squeeze by ear and to set yourself a strict plan and stick to that plan. At least if you know that you've stuck to your plan, you can't complain about missing out on higher prices and you can't complain about missing the squeeze entirely. I think the worst possible scenario that you can be in is to have your plan set, ready and waiting, and then not stick to your plan and panic during the squeeze and end up missing the squeeze. And I think that nicely leads me on to point number 2, which is to have multiple selling brackets. Obviously, everybody so far has their bracket in which they want to sell their AMC shares. Maybe it's at $1,000 per share, maybe it's slightly lower at $500, maybe it's higher at $5,000, maybe it's significantly higher at $10,000, $20,000, $50,000 or above. But I think the main problem with having one individual bracket is that it places too much pressure on AMC reaching one specific price. If you have multiple sell brackets and plan to split your sell orders into multiple different portions, you can therefore hit multiple different brackets on the way up during the squeeze. I guess the biggest problem with setting multiple sell brackets is the fact you run the risk of selling a large portion of your shares before the squeeze really reaches that very tippy top. Therefore, I guess the most optimal way to sell your shares is to allocate a smaller portion of your shares to earlier portions of the squeeze. Maybe, for example, you sell 5% of your overall shareholdings as AMC runs over $200 per share. You sell another 5% at $500, another 5% at $1,000, and you sell the remaining 85% when AMC hits, for example, $5,000 or $10,000. But I do think it's very important, regardless of how you set your percentage allocations, to set yourself multiple price brackets so you're not placing too much reliance on one individual price. I think if you're waiting for one specific price, as AMC does start to run and gets closer and closer to that price, you run the risk of panicking more and more as you get closer to your one individual price. But obviously, if you have multiple sell brackets and as AMC squeezes, if it already triggers a number of your sell orders, I think you'll worry less and less and be less and less panicked during the squeeze because you'll know that some of your sell orders have already been hit and you're just waiting for the very tippy top. I suppose if you relate the squeeze to buying a house, if you place all of your reliance on one specific property that you've seen, you risk paying too much for that property. But if you go and view multiple properties that all look very nice, at the end of the day, it doesn't matter which property you end up with as long as you end up with a property. And that way you don't run the risk of overbidding yourself and overpaying for that property because you're fairly happy to have 3 or 4 different properties that you've been to see. Now I think next up on my list is number 3, which is sentiment. And by that I mean paying as much attention as you possibly can to the sentiment in the wider market. aka paying attention to YouTube, paying attention to Twitter, paying attention to Reddit, paying attention to what the Ortex data is showing. Is Ortex showing us that the shorts are covering? Is the mainstream media reporting that a number of hedge funds are going bankrupt and being liquidated? Is the mainstream media and large influential figures in the community reporting that shorts are covering? I think the more attention that you can pay to the wider sentiment in the market, I think that will give you a better feel of how the squeeze is progressing and how close to the very tippy top we are. Now, I think one of the ways to pay attention to that sentiment is to watch the people on YouTube that will be streaming the squeeze. For example, during the squeeze, I will be sure to be streaming at least for the entire market hours, if not for the aftermarket and pre-market as well. But I do think that when choosing your streamer to watch, I do think it's very important to avoid FUD or to avoid potential shill streamers. You don't have to watch my stream, for example, if you don't want to. You can watch any streamer in the community. But I do think it's important to avoid those streamers that could potentially have been bought out and could potentially be trying to convince you to sell earlier during the squeeze. And therefore, I do think it's important that during the squeeze that you pick a singular streamer and stick to that streamer. A streamer that you know, that you trust, and that you don't believe to be a shill. I think the worst thing you can do during the squeeze is to watch multiple different streamers all at once, all giving you multiple different viewpoints and conflicting viewpoints as to how far through the squeeze we really are. Obviously, if there's multiple different conflicting viewpoints here, there and everywhere, it runs the risk, and you run the risk, of panicking more as the squeeze progresses and potentially selling early or missing the squeeze entirely. As I said, I do think it's important to pay attention to the sentiment, but the worst thing that you can have is multiple different viewpoints to throw you off and make you panic even more. And I also think it's very important for you to decide how you want to pay attention to that sentiment. Do you want to take a very active approach to paying attention to the sentiment or more of a passive approach? Now, I think this really depends on your working hours and also your sleeping pattern. For example, do you work night shifts and sleep during those market hours? If you are asleep during those market hours, it's more difficult to pay attention to the sentiment as the day progresses. At the same time, if you're working full time, it's very difficult to pay attention to Twitter, to YouTube, to Reddit all day during those market hours because you're working. And therefore, in those scenarios, it may be better for you to take a more passive approach to monitoring the sentiment and maybe just watch 1 or 2 videos after the trading day during the squeeze. But for example, if you choose to take a more active approach, it may be best to watch a streamer for the entire of the market hours and potentially for the pre and post markets as well. But again, I also think it depends on how much you tend to panic as well. If you're watching the chart every single second of the day, you may end up panicking more and selling too early or missing the squeeze. And therefore, if you are somebody that panics by watching the chart every single second of every single day, it may be best to take a more passive approach to the squeeze, set your sell orders and walk away. But I do think something that's very important during the squeeze, even though we have our plans, is to expect a lot of chaos. I do think you should expect multiple attacks and manipulation from the hedgies, and I do think you should potentially be wary of the buy button being taken away once again. We know the hedgies don't play fair, we know the hedgies aren't scared of committing illegal and nefarious activities, and we know they also aren't really too scared of the SEC because they'll probably just receive a small fine rather than a large jail sentence. And therefore I do think it's important that during the squeeze, when we see the price drop, not to be too scared. We know there's going to be a lot of chaos, and we know these liquidations are going to be taking place at multiple different times. All of the funds that are currently shorting AMC aren't going to be liquidated at the exact same second. Those liquidations are going to be taking place at different times during the day and likely over multiple days as well. And therefore it's important to stay calm during the chaos when we see the price dropping, because we know the liquidations are taking place and there will be another liquidation after that that pushes the price right back up. And finally, number 7 on my list is to avoid FOMO, but also don't paperhand. And I think it's important to remind yourself of the due diligence because we know just how high AMC can really go. By that I mean avoid FOMO. Don't fear missing out on the very tippy top of the squeeze. Be happy with the price brackets that you've set and the prices that you sell at, because if you don't sell, you may risk missing the squeeze entirely. As the price of AMC starts running up, you may feel that you've set your price brackets too low, and therefore you may try and hold on to your AMC to reach the very tippy top of the squeeze. But as I said, I do think it's important to avoid that fear of missing out. Missing out on the very tippy top of the squeeze is not a bad thing, because there's going to be very few apes that do hit that true tippy top. When AMC ran up back in June, over 1 billion shares were traded on a single day. However, only a few thousand shares changed hands at the very tippy top price of $72 per share. And therefore, again, when AMC squeezes during the mother of all short squeezes, it's likely that at the very tippy top of the squeeze, only a few thousand shares will be sold at the very tippy top point. That may only be 1 or 2, maybe 10 or 20 individual apes that get those prices at the very tippy top, and all other apes will have prices slightly lower before the tippy top or slightly lower after the tippy top. But obviously, the more you have that fear of missing out of that very tippy top, the more you run the risk of missing the squeeze entirely and selling right at the bottom after the squeeze. But at the same time, I also think it's important not to paperhand. Don't have your price target set so low that you miss out on the majority of the squeeze. That's why I said it's best to set yourself multiple price brackets that are fairly evenly spaced during the squeeze. Maybe you have some down at 500, maybe some at 1,000, 5,000, 10,000, and 50,000 and above, for example. If you have one singular bracket or multiple brackets down at $100, $200, and $300 per share, you're on the risk of missing out on the majority of the squeeze. I think it's important to remind yourself of the due diligence that has been performed and remind yourself of just how high AMC can really go. When you remind yourself of just how many synthetic shares there actually are and just how much money the collective members of the DTCC actually has to pay for the squeeze and the money the Fed has to pay for the squeeze as well, and you remind yourself of the geometric mean due diligence, then you realize just how high AMC can truly run. And therefore, I think it's important not to limit yourself and set your targets too low, but at the same time, stick to your plan, don't panic during the squeeze, and don't try and skip all of your brackets and time the very tippy top of the squeeze with your entire shareholding. Because we know that even though the squeeze itself may last multiple hours, multiple days, or even potentially multiple weeks, we know the very tippy top of the squeeze will only last mere seconds. Also guys, if you have any further AMC squeeze related questions, be sure to leave them down in the comments below and I'll answer them in an upcoming video. And as always guys, be sure to let me know what you think down in the comments below. Also be sure to ding that notification bell because that way you'll be alerted when I upload a new video. Cheers.